Hey everyone, Jason Evans, Mortgage Loan Officer here at Rate. My NMLS number is 21205. Today I want to drill down a little bit on DSCR loans and specifically our ability to use short-term rental income calculations to qualify our clients for it instead of using a long-term rental amount, which can make a huge difference. So first of all, DSCR, this is debt service coverage ratio is what that stands for. And it's a loan specifically for investors. So you have to be purchasing a home to use as an investment property. You're not going to use it for your personal use at all. It's strictly a rental property. It's not for first-time home buyers. You have to own your current primary home or own a home, and you need to be looking to buy a rental property specifically. What the benefits are of DSCR loans is we don't look at your personal income or your personal debts at all. The income qualification for these loans is based strictly on the cash flow of the property you're purchasing. So what this means is the rental income for the home you're buying needs to be at least a 0.75% ratio to what the expenses are for the home. When we talk about expenses on these loans, it's strictly the principal, interest, property taxes, home insurance, and HOA fees. So for example, using really simple numbers, easy to understand, if the principal, interest, taxes, insurance, and HOA fee were going to be at $1,000 a month, the rental income for that home would need to be only $750 a month or more to qualify on the income basis for this type of loan. So again, $750 per month in rental income would qualify you for a $1,000 principal, interest, tax, insurance, and HOA fee payment on a property. It doesn't even have to be a 1-to-1 ratio. It's 0.75 to 1. So with that, you can get approved for your loan, even if you don't have a job, maybe you're self-employed and you don't show profit on your tax returns, or maybe you just got laid off from your job, maybe you have a lot of debt, a lot of other properties you own. None of that matters. All that matters is this DSCR ratio on the property you're purchasing. Now, the thing that's a little unique about what we can do, number one, going down to 0.75 is pretty good. A lot of DSCR lenders require you to be at 1.0 or higher for the ratio, so that's pretty good. But in addition to that, if you're buying a property that's in a vacation area and you can get really good short-term rentals for it, we will use a short-term rental income amount instead of a long-term rental amount to help you to qualify for this, which makes a huge difference. For example, I just had a client buying a home in Florida where the long-term rental amount would be about $3,800 a month is what they were projecting. We did a short-term rental analysis, which the way we get this information is we can have the appraiser fill out information as part of the appraisal for us. They'll do an analysis of actual short-term rentals in the area and give us their opinion on what this home could rent for long-term on a short-term rental basis. And the result was $7,050 per month, almost double what the long-term rental amount would be if you were to get someone to sign a 1-year lease, for example. So now this client qualifies with their $4,200 a month payment, where on the long-term rental analysis, they probably wouldn't have qualified. So it makes a huge difference. It helps more people to qualify, and it's great for those scenarios where it's a beach community, maybe it's on a lake or in a mountain, or just next to somewhere that's going to be highly popular for short-term rentals. This can help you to get that home and make that income. So give me a call. I'd love to talk to you about our qualifications for this program. One other key thing I wanted to mention is going down to the 0.75 DSCR ratio. We only require a 660 credit score for that as well. So great options for potential investors. Again, you just can't be a first-time home buyer. It's one of the key requirements. So give me a call, go onto my website, fill out your information, whatever's easier for you to connect. I'm happy to talk to you and go over how we can help you with this program to buy your next rental property.